I would like to welcome everyone this evening. I'm Deirdre Mendez. I'm the director of the Center for Global Business. And I've really been looking forward to this presentation for two reasons. One is that we have such a fun topic tonight. We're going to learn about all kinds of innovative, cutting edge things, which is always exciting. And we have two fantastic speakers who I'm really looking forward to talking to this evening. So our first speaker is Cato Felan, and he is the co-founder and CEO of Lauha Capital Management, an alternative investment company with a focus on cannabis. Cato has many years experience in asset management and some of the world's largest global asset companies before he founded this new venture, which is relatively recent, but not that recent, right? Because you've been doing this for a while. So Cato, welcome, and thank you so much for joining us.
Thank you, Deirdre. Happy to be here.
And our other speaker, last but not least, is Ray Brimble. And Ray's been involved in global investments of a variety of sorts for 45 years. And he's also the founder and CEO of SeedPod Holdings, LLC. And SeedPod focuses on investments in early stage companies that have positive social impact. And for anyone who's been paying attention, cannabis and positive social impact are two of the hottest going right now. And so you heard it here, if not first, at least all together in one place. So I'm looking forward to hearing the stories. I know some of the path that each of you have taken, but not all of it. And so I'm looking forward to hearing from you along with our audience tonight. So Cato, since you're a deep diver in a very particular industry, and Ray is involved in lots of diverse activity, let's start with you. And I'm going to ask you the same question, but I think you're going to have very different answers for these questions. So hopefully it'll be interesting to hear all of it. So Cato, we know that you are doing a cannabis fund, which by definition is an edgy industry. So tell us about how you got involved in this field. What made you want to do it, and what made you feel that the time was right?
Great. Thank you, Deirdre. Thank you for that question. And thanks everyone for being on the call. I really appreciate it. That's going to be a lot of fun. So I had been in asset management for 20 plus years, and I'd all on the public equity side. I'd worked for Fidelity Investments, Putnam Investments on the active mutual fund side, and I'd worked for iShares, BlackRock, and then Dimensional Fund Advisors on the passive ETF side, always working in and around Latin America. And so if you've been in the industry long enough and you're kind of seeing what's going on in the industry, you see that BlackRock and Vanguard take up about 2/3 of every dollar going into the wealth management space. You know, they're just so large and growing so fast that everybody else, every other mutual fund company is fighting for a smaller and smaller piece of the pie. And so indexing is really won out in the general public markets. ETFs have won out. Low cost, broad-based investing have really won out. Their active mutual funds have been in outflows since 2008, even before that. And so, I wanted to. I had an entrepreneurial dream that I needed to fulfill, that I needed to do before, that I needed to have happen. And it was that time in my life where I could do that. And I had enough experience and network to really help me get there. And so I wanted to jump into private equity, but nobody was going to hire somebody making 6, 7 figures that doesn't know anything about private equity. It's just not going to happen. So I had to strike out on my own. And so the way I know how to kind of get into industries that I don't know anything about is to go on the frontier, emerging markets. And hopefully my resume would allow me to get enough meetings that I needed to get to learn what I needed to learn. So I started looking at crypto and I looked at cannabis, and just from my investing background, the cannabis made more sense. hindsight is going to where crypto is now, where cannabis is now. I still believe in the long-term story for cannabis, and it's a tremendous story. But the hype and what's going on in crypto is really just incredible to watch. So that's been really fun. So I chose cannabis, and then I just had to learn everything. So I literally, my co-founder and I, we basically, she's a UT grad as well, and she and I both just jumped in my car and we drove to the West Coast, and we went to California, Oregon, Washington, Canada, up into Vancouver in Canada, and then back down to Nevada, Colorado, going to every kind of legal state we could and meeting everybody we could in the space, VCs, private equity, investment bankers, growers, extractors, anybody that touched anything in the space. We wanted to learn what was going on in the industry, because we were in Texas at the time, and there's nothing going on in legal cannabis in Texas outside of a couple of companies and the like. So we needed to be where the action was and really get an understanding of what was going on in the space. And so that's what we did. So we spent about 2 years doing R&D in cannabis, learning what happens when you plant the seed and everything thereafter. What can you make out of it? What are the regulations? What are the taxation? What are the challenges? What are the regulatory environment for each of the states that it operates in? And just really getting a deep dive in that industry and understanding everything that can be done with the plant, how it can be sold, processed, produced, and marketed around, and figuring out what the supply chain looks like. And we early on, we decided it was only going to be US that we were going to look at. There was a lot of things happening globally, but we needed to focus. We needed to focus because we're just doing such a deep dive in one place. And so, as we did that, then we started looking at the investment landscape. Investment landscape. I'm sorry. Let me go back. Just a quick one. Our first client, we got that first 6-week road trip that we did. We got a client. We got somebody that took a leap of faith on us, and it was I don't know if it was that hard of a leap of faith, because it was a former, we call it OG grower in the Emerald Triangle, who'd been growing weed for 30 years and just finally decided to go legal when it was available to him in 2016 and 17. So we met in 2018, and we helped him write his business plan. We helped him do evaluation on his business, because it's a multi-million-dollar business, but they didn't have any records. So we had to really go through and rebuild, every single data point for that company to come out with evaluation on what that company was worth and what they could sell it at or and the like. And so that's how we started. But that wasn't really scalable. That was hand-to-hand combat, one client at a time, really drilling down, my partner literally sitting with these farmers, and as they go through, well, all right, in January, we buy this, we do that, and just going through every single thing, every glove and every bucket, everything was done. That's not really that scalable. And I needed a way to marry the experience I had and this massive network of working in financial services in Latin America, high net worth, family offices, all that. I needed a place to put that. And that was not that place. And so then the next iteration was just looking at the investment landscape and doing some work and raising some capital for some different companies in California, Colorado, and Florida. And that we were successful in that, but the reality is that risk reward ratio was just too much for me. Single company risk is not something I'm used to, and not something I'm comfortable with. And I needed to get back to a more diversified play to put in some concentration limits and the like, and really provide a broad-based way to invest that looked more like everything I'd ever done before, rather than kind of the gunslinger approach and that was happening in cannabis and private equity. And so I started looking at different fund managers that were out there, but none of them really had, at that time, the background that I had or had worked at any of the firms that, major firms. These were guys that were like, hey, I think cannabis is going to be bigger tomorrow than it is today, so I'm going to jump in and try to figure it out. And they did, and they were rewarded for that. But where I was in my space, I needed more rigor around what I wanted to do, because I wanted to take this to the masses. I didn't want it to be just a subset of people that got access to these deals. I wanted to make it broad-based as I could. And so I just ended up saying, all right, then I got to do it. And I'm not a CFA. I'm not a portfolio manager. I've been on the sales and distribution side my whole career, but I've taken notes throughout that entire career of what I wanted to have in the firm that I was going to build, in the fund that I was going to build, in the firm that I was going to build. Everything I'd ever wanted to have happen, I wanted to put into this fund, and every learning I ever had about investment management, I wanted to put into this fund. So I could structure that, and I've launched a number of funds and mutual funds and ETFs. And so I knew how to structure those things. And so I created, that premise around what we're going to do is really invest in US cannabis companies because we didn't want to bother with the international. It was going to be privates only because at that time, and even now, there's still only about 38 stocks that trade on the on the U.S. exchanges, but 29 are over the counter, and so there's no volume, and there's really no link between price and fundamentals. And then we were going to only invest in fund 2 and up, so we needed managers that had launched the fund, raised the capital, invested, deployed, reported to their LPs, and their LPs said, "Hey, this is good enough. We'll do another fund with you." Because there was a lot of speculation, a lot of hot money, and a lot of fraud in cannabis that we saw we were coming in. So we needed a rules-based way to avoid that. And the best way I know how to do that is kind of create some rules around that to carve that out for us. And it's worked out tremendously. And so, then we had our premise, we had our thesis around it. We started wrapping out the PPM around that, what that was going to be. And then from that day on, which was about February 27th, 2020, I've been completely focused, the team's completely focused on kind of getting the market and getting this fund out. And this was built completely in the pandemic. And it was, we're a completely remote place. I'm based out of Miami. My co-founder is based out of Austin, but she's moving to Miami in December. We have 2 people in New Jersey, 1 person in Buffalo, New York, another in Dallas, another in San Francisco. So we built this whole thing through a pandemic, and it's really been a fantastic learning experience about how to build a place. So, that's how I got into it. That's what I did. And the reality of it has been even better than I thought. But the challenges have been even greater than I thought as well, too, because we are early and it's still a federally legal substance. And there's a lot of constructs and restrictions around the things that we need to do as far as flow of capital and the ease of capital coming into us from different institutions and the like. But it's getting better every day. And we continue to have great receptivity, and we're first mover in the space, and so we're pretty excited about kind of what we're trying to do as building this fund of funds that is the first way to get a balanced and diversified investment in the entire U.S. cannabis economy that is more look like an index fund, and where we're giving you a representative sample of the entire U.S. cannabis market, and just trying to capture that rocket ship and harvest those returns. And so, that's what we did and how we did it and how we kind of got into the space. It was really hard. I'm not gonna lie, it was very, very hard. It's taken every relationship, every connection, every experience I've ever had, and every success and every failure to get to this point. And I've had to evolve rapidly and constantly to do so, but it's been a blast.
Wow. Okay. So that was entrepreneurship 101 through a fire hose. Mm-hmm. You heard it here. I love that answer because it's the kind of answer that as a faculty member, I really appreciate. It's not oh, well, I fell over a log one day and decided that was for me and I just did it and so on. The really focused, concerted effort, doing your homework, all that. Those are the kinds of messages that we especially appreciate. Sometimes you do get dumb and lucky. A lot of times, I think entrepreneurship, for the most part, for the people who are really successful, is an enormous amount of work. So that was a super deep dive into a particular industry and a particular aspect of a particular industry. Let's turn now to a little bit broader picture perspective. And Ray, you've spent a lot of time in a particular industry, but you now more recently have broadened your focus. What are you seeing? What kinds of industries are you looking at? And what do you find compelling? And what do you choose to get involved with?
Thank you, Deirdre. And before I begin with that, let me just say also that, first of all, I've had the pleasure of knowing Cato for a while, and I've actually never heard that detail. That is fascinating stuff. And like Dr. Mendez said, it's kind of it's just a primer on how you stand these things up, but it's also a representation of, you never actually end up where you thought you were going. And for those of you all getting degrees and people telling you, well, you have to just have the whole thing mapped out, you absolutely don't. And even if you did, you probably wouldn't end up going there anyway. So, my founding of Seed Pod Holdings, which is a early stage investment company 4 or 5 years ago was kind of like me shifting gears a little bit. And as Deirdre mentioned, I had been involved in a particular industry for 26 years. And basically, I wanted to deploy the capital away from that, not because there was anything wrong with it. It was an aviation related industry, but because I wanted to try some new things. And I specifically wanted to stand up this angel investment platform where I could look at a lot of different deals in a lot of different areas. And basically what we do as angel investors is kind of pick what we call the verticals, which are just the kinds of businesses that we might want to look at. And some of those verticals for me are biomed, because there is just so much revolution going on in all kinds of biosciences, in medicine and medical devices and pharmaceuticals and so forth. We all know that. We could see with the COVID vaccine that not only do we have these revolutionary substances being invented, but the way they get to market is absolutely revolutionary. So without getting too deep into that, one of my themes that I'm happy to go back to about what I think is a new hot thing is what I call retooling, which is basically learning how to invent and get government approval and build and go to market with all kinds of stuff far quicker than was ever done before. That may actually be a greater opportunity than the substances itself, because for every Pfizer COVID vaccine, there's probably 5,000 subcontractors that really were the ones that did all the different stuff. So I've got biomed, and I've got a few other things as well, but the one I wanted just to mention, because I think you'll find it fun, is what I call experiential. And by the way, all of these things, I try to invest in things that have a measurable social impact, and that's hard, and it's particularly hard now because everybody and their dog wants to have their company and their product appear to have a measurable social impact. In fact, there's a term for it called greenwashing, and so that's a big deal. But in experiential, what I found, I had a category, a vertical that I was plugging all the stuff into that didn't go with my other verticals, called Stuff Because I Like It. And what I found is the investments all in that category all had something in common, is they had something experiential about them. And in fact, I would even ask Kato if his company in cannabis is experiential, But I think this is a huge kind of opportunity for you all to grow into and find jobs in and stuff, because people want to do things and spend their money on things that are not necessarily just accumulation of stuff, but just experiential. Obviously, travel is one of those things. I'll give you another example. I have invested in a number of bars and restaurants that have large outdoor spaces where people can bring their little kids and drink beer and stuff. Some of the ones you might know are Sour Duck Market and Armadillo Den in South Austin and so forth. But it's not just selling somebody a drink or a taco or something. It's the whole experientialness that we've kind of expanded the definition of what it is to go out and where you go out. And then I would just mention one other one that is a newer investment for me that I'm just fascinated with, which is actually a carousel. It's an old-timey carousel, like with the horses and stuff. Hopefully every one of you has been on one of those as a kid. Believe it or not, it's a real business. And there is a huge category of business for people to take their kids to and to have these kinds of experiential fun times and so forth. And there really isn't enough of that stuff out there. So there's a tremendous opportunity for it. And I was surprised to see that there were over 150 carousels here in the United States operating as businesses, and virtually all of them are making money. So I just throw that out there, not to ask that you all get into it, start your carousel running careers, but rather just to demonstrate that we live in a time where there's all kinds of different business opportunities. And if you keep your eyes open, you'd be surprised what you'll see.
Wow, Ray, I didn't know about the carousels. That's wonderful. I do, however, know about Sour Duck. So now all of you know that if you do visit this wonderful place, not on a Monday, I should mention, because they're closed, you will be contributing to Ray's return on investment. So Sour Duck is a great place to go, but I know exactly what you mean about the experiential aspect of eating there, because it really is an outdoor place. And the last time I was there, I watched children playing on the stage there, and that was the experience for me, was getting to watch them. What an interesting category to have. I love that. So I think you've answered some of the other questions that I was thinking. Talia says that Sour Duck has the best baguettes. Yes, they do. Pastries. Don't get me started. I'm a foodie. I'm not going there. Okay. So one question that I was planning to ask, and you've kind of touched on this, but there's been a lot of innovation associated with the pandemic, right? So what are some of the areas where you're seeing accelerated innovation? And Ray, of course, since you're right there, you mentioned time to market for not just medical devices, but pharmaceuticals, everything, right? So what are some of the businesses associated with accelerating time to market? I think of that as a regulatory thing. But what else is going on there that's innovative?
Well, I'll just take that real quickly. I'm going to go, definitely regulatory. We cannot take 10 to 20 years to approve these substances and drugs. And but another obvious one is supply chain issues. And it's clear that our supply chain business model and our global sourcing model collapsed. That's all there is to it. And we're seeing unbelievable shortages and inflation and all kinds of stuff like that, because the old model is just old. And there's going to be huge opportunities for new supply chain solutions. In the short run, I'll give you an example of how, back to my putting on my aviation cap, during the pandemic, the airlines were not, obviously not taking passengers. So they repurposed their aircraft to basically be cargo aircraft. And they took all the seats out and just stuffed a bunch of boxes in, and they made a fortune. And they're still continuing to do that. So it's just a good example. You don't have to come up with these, fantastic space age, algorithm driven things all the time to address needs like the pandemic. You can repurpose what you have already to make it act in a different kind of way. And so that's another theme that I want to give, in addition to experiential, is that there's going to be a lot of opportunities in looking at things that can be repurposed to meet the current needs, and then repurposed again when those needs do not have as much validity. So that means that the solutions of the future are going to have to be really agile, and the investors of the future are going to have to be agile with them.
Absolutely,
Well,
Ray.
Yeah.
I'm sorry.
Well,
if I made you, go ahead, Deirdre.
Well, I was just going to say, I think those are really important points. And Kato, along these lines, obviously the regulatory aspect is really important to you as well. And I'm sure you have some additional, and you're seeing innovations around your field that are very interesting as well. So please go right ahead.
Absolutely. Yeah. And I think it goes in with what kind of Ray's talking about there too. But what I see in our world and what I advocate for is for everyone to get into the cannabis economy. You know, not in it, and I'm not saying that kind of in a glib way, but I'm meaning that it is an industry that is growing at 30 to 40% a year within the U.S., but it's happening in the private markets alone, and it's not a public market thing because the federal illegality stops access to public markets. But what that does mean is that everybody competing in cannabis does not have some other monopoly or oligopoly that they're competing against. There's no big tobacco, there's no big alcohol, there's no big pharma, but there's no big law, there's no big PE, there's no big consulting. None of those things are in here. So we're all building this now on our own with all of our private money coming in and feeding this innovation. And so what I have seen is I've seen people use it coming into cannabis to test their ideas and innovate within cannabis because there's already a market there. There's already a ready consumer base, a ready business base that wants to try new things. Hey, let's see if you can use your AI that you used at Williams-Sonoma in your customer tracking, and you learned all those things there, but now you're going to do it on your own and do it better in a different way to help engage with customers at a dispensary level or a brand level. What does that mean, and how do you build upon that? Well, a company like that, sure, they may have some access to Silicon Valley, kind of VC, but less than 1% of companies in America get VC funding. And if you come into cannabis, you're going to get in front of a VC. You get a decent idea with a team around it to kind of build out an MVP on that. You're going to get in front of a VC. You're going to have a market there. And so we've seen a ton of innovation come through where people are using this very vibrant and growing, fast growing economy to test their ideas, to test their products, and then launch them into the broader market. There's ag tech that's going on in cannabis right now. A woman-owned company called Willow that they make these very simple type containers that look like a transparent washing machine, but they blast the cannabis with O3, ozone, and that kills bacteria and mold and all these other things. But that's a process that they can take to regular ag everywhere, to corn, soybeans, and wheat and the like, and that's what they're doing next. But they grew to a $4 or $5 million revenue company, and now they're taking that, expanding it out to the rest of agriculture. There's a company in cannabis called Pathogen DX that started doing testing for cannabis and levels in the body and cannabinoids. And as the pandemic came around, they were able to shift quickly on testing for COVID and had tremendous growth around that. And so in cannabis, in the cannabis economy, it touches every part of everything we do, and it will be at some point ubiquitous in all of our lives, not in kind of this recreational drug kind of way, but in a medicinal and nutritional and a commercial industrial way, because it is a plant that we've had in our existence as humans for thousands of years, and only had 80 years of this random prohibition. So there's a lot of innovation in cannabis. I encourage everyone to come into the space with their idea, even if they've never tried cannabis before, never want to. There is the ability to foment and grow and challenge yourself and bring an idea to market very quickly in cannabis. It's hard. There's a lot of structural things that are hard. Like it may take a while to get a bank, you won't get a loan from a bank. You're gonna have to raise all private capital from friends and family and seed till you get to your MVP. But there is an outlet there, and there's a way there to fulfill your ideas with capital if you get to that point. So I think there's a lot of innovation. I think cannabis is a ripe economy to do that.
Super. Well, that was Entrepreneurship 201. So one of my questions was going to be, for members of this audience who want to get involved in an innovative field like the ones that you've talked about, how should they prepare and what should they watch for? So Kato, if you have anything to add, please do. And then Ray will see what you have to say.
Yeah, I mean, it really just, there's so much information out there, but just really dive into whatever industry you want to get into. There's a wealth of information to find there. And then as you find that information, find the people to talk to about that. I mean, the great thing about this pandemic is that it has really allowed for authentic communication to happen even in the digital age. There are times where I can make a cold call to someone through LinkedIn and just have a conversation, and that could lead to something. And they're not all like that. I mean, maybe I have 100 of those, and one comes, 100 outreaches, and then one comes back. But they're coming back, and I really believe that we've really shifted in how we do business in this world today, and that all voices have an opportunity to be heard. All voices have an opportunity to show their mettle in this space. But you have to really do the work. You have to do a lot of work around it. I get a lot of people that approach me because I'm a private equity manager, and they through one way or another get a meeting with me, and I'm generally really open. I manage my time real well, so I'll allocate some time to kind of cold calls like that. But a lot of times they'll come to me and they'll throw out an idea, and that's all it is an idea. And I was guilty of that too. I thought money would just flow in if I had a great idea, but the reality is that you really have to build something to sell that. And so that's what you really have to do, is figure out what it is what does it take to get to X level that you can take to somebody that is feasible with an extra layer of advice or counsel or a connection or capital can take you to the next level. But you have to start figuring out what that's going to be. And I'm a big proponent of, I did it one way. I worked in corporate America my whole career, and then I jumped out, and I had a massive network. I had a massive network of thousands and thousands of people that I've worked and collected and coalesced over the years. And I could go back to that, and I could go back to people and ask them for help. When you're younger, you don't have that network. You just got to go out and fail as quickly as possible. Just go out, try, fail, learn from that, fail again, and learn again, and then fail again. And eventually you will learn not to fail anymore, because you will learn from those failures to grow. And most of the time, the failures you have are going to be your own. It's your own internal, whatever hang up, personality issues, or quirks you have. There's something inside you. You are the only limiter to your own success. So the sooner you figure what that is, the stronger and more successful you're going to be. You're muted, Deirdre.
Apologies. So that was a super answer to that question. We've got some questions coming in the chat, but Ray, please, what should people do if they want to start? Unfortunately, most of us are not in a position to become angel investors now.
Yeah.
But hopefully we could maybe work for some of the companies that you're investing in. And how will we go about getting into that?
Well, about angel investors, it kind of reminds me of authors of books, which Deirdre, you are an author of a book. But a friend of mine said, is she getting people to buy books and readers? And she said, there's more people writing books than actually reading them these days. And it's kind of the same thing with angel investors. There seem to be more angel investors than there are employees to work in the companies that we want to invest in. And that's just an extraordinary thing about the time that you all are entering the workforce, is that all of these companies are desperate for talent. And I know it probably doesn't seem like that when you feel like you're on the periphery, but it's there is a lot of enthusiasm about hiring, particularly graduates from the University of Texas at Austin McComb School. So I think you're going to have a much better time of it than we did. And the other thing I'll say is the biggest piece of advice that I would give is, as abstract as it might seem, is, don't approach any of these industries or businesses that you might be interested in looking at as what I call fighting the last war. And what I mean is we're in a real inflection point of solutions in the industries are dying at a rapid rate. I used to have a joint venture with General Electric, which when I had the General Electric venture, when they owned 50% of my company, they were the largest or second largest company in the world. And now they've just split into three, and and so forth. They were representative of the last war. The next war, if you will, and I don't literally mean war, but the next group of opportunities is exactly what Kato was talking about. And what you should look for is if a lot of people shun it and think you're crazy, then you're probably onto something. And that's exactly, I'm sure Kato will agree with that one. You know, so you want to look for things that are a little bit edgy and out there, because but not all of them are going to be correct. But at the same time, there are new opportunities under new rocks that we didn't think existed before. So don't be afraid to spend 5 or 10% of your time searching and thinking about things that might not necessarily be a big thing now, but could be a big thing in the future, like carousels. That's what I'm talking about. Hey, by the way, I have to ask the crowd here, if you were to guess before you got on here, which company was the cannabis company, wouldn't you have guessed Seed Pod instead of Kato's company? Come on.
Good point. Good point, Ray.
Well, so maybe the two of you need to talk, right?
All right.
I know Ray.
Rights.
I know Ray
Licensing
has
rights.
the rights to that one.
I get it.
Well, we're getting a lot of questions and some great ones. So here's what
I see. I see him too. But go ahead and read them, Deirdre, because I don't do that well. So go ahead.
Okay, well, one that I thought a lot of people are probably a lot of people are probably wondering is, since cannabis is still illegal federally, isn't the entire cannabis industry contained within each state? And if so, how does running a business industry, which is limited within each state, how is that different from running a normal business? That must be something.
It's massively different. It's there was an article, or there's one of the analytics companies called BDSA that does reports on cannabis companies. And they had a pricing report across consumer brand companies and the pricing discrepancies they had in each state because of taxation, regulation, cost of goods sold, and the like. And they were massive discrepancies for some really big brands in cannabis. Some states, they were charging half as much as they were in other states. And so, yeah, that is a big deal. That's the big reckoning point, and that's the part that has for me and as an investor, the binary trade, because one of the models that is happening is in these states is that people are going what's called vertically integrated. They're owning everything. They grow the plant. They process the plant, they extract the plant into oil, they produce gummies and chocolates and other things and vapes and other products. And then they have dispensaries to sell them. And so that has been a way for those guys to get kind of scale in each individual state. And one of the reasons they have to do that is that there is some really onerous tax regulation in cannabis that cannabis companies can't deduct the cost of goods sold. And so they're not able to really manage their companies in the way that a normal LLC would in any other state or nationally. So yeah, there's some massive differences. So we look at the way the cannabis business economy is divided is plant touching and ancillary. Plant touching is obviously plant touching, anything that touches the cannabis plant, the vapes, the products, the processing, any of those things. And then the ancillary is all the ag tech and fintech and branding and SaaS and AI and marketing and anything that goes into the plant that doesn't touch the plant. Those are the companies that can grow nationally, they grow globally, they're not tied to a license and not tied to a single state. The plant touching side is about 1/3 of the overall business, and the non-plant touching side is about 2/3. And it's just, because it supports that overall industry. And there's about 12,000 licensed companies in the US for cannabis, all divided by state. There are a few what are called multi-state operators that are plant touching that operate in individual states. No one operates in all of them. Some operate in 7 or 6 and 5. Everyone's trying to figure out what combination of this either vertical or owning different things across different states is going to help them be successful in the legal when it gets legalized at some point. So those MSOs have the biggest risk. They've got the most money invested. They're billion-dollar operations, and with the stroke of a pen, they could be, out of business really. If interstate commerce comes through and you can ship all your cannabis from California all over the country, much like you do lettuce and the other 50% of our agricultural products. Well, you're not going to need to grow it in Michigan or Massachusetts or Vermont or things like that. And so, these guys are really trying to hold on to that kind of little monopolies that they've had in each state. And so that's a big risk. And so for us, we have to look at that risk and understand over the arc of time of our fund, where do we mitigate? How do we mitigate that? And so we put that on the debt side so we can collect, high yields, 20% plus yields, and manage that, because there is a big risk in those companies and what's going to happen after federal legalization. So those are all very major considerations that we have to look at every time we make these investments. But I will say we're also a fund to fund, so I'm choosing the best managers on the ground that are making loans to these private debt funds that are making loans to these big MSOs, venture capital companies that are looking at seed and later stages for early stage companies in cannabis, and then private equity funds that are looking for kind of growth equity, 1 or 2 rounds away from a large exit. And so I can have a diversified portfolio and it just captures the returns where they come and really just shorten the J curve so we can really start paying out some real returns for our LPs.
Whoa, that is fascinating. What an amazing answer. Cool. Thank you. Thank you for that. I mean, that is really, this is something I've never heard. This combination of industries that are vertically and horizontally integrated and all jockeying for position and trying to, with so much uncertainty. This is really the outback, but what a fascinating thing to be watching.
It is very fascinating.
So,
a good time.
Thank you. So Ray, here's a question for you. When you're looking at new companies to invest in, are you more interested in investing in the product or the people who are driving the idea?
That is the classic question. And thank you for whoever asked that. So we call it, are you investing in the horse or the jockey? In racing parlance, a lot of people invest in, if the horse has a great track record, ran the Kentucky Derby well 3 or 4 times, or if has the jockey won many races. Obviously, the product or service in the industry itself has to be sound, and there has to be tremendous growth opportunities, particularly because where I get in is at the early stage. That's not at the as a startup. I don't actually invest in startups. So the companies I invest in actually have to have revenue and some kind of market proof of whatever it is they're doing. And that's where I got the seed pod concept, that, the seed pod is where you nurture the seed right before it's going to sprout into a bush or a tree. And so that's where I come in. But, in that respect, I like to have good horses to run, but I give a lot of credence to the jockey as well, because I found that human capital is way more important than whatever financial capital I'm bringing to the table. So I really screen very carefully, and it's just amazing to me what people can do when they put their minds to it. So that's kind of my formula. And I just want to, the last thing I want to just say on that is that I always look for a realistic path to growth. And in most cases, most of these companies want to be sold as well. And I say that because probably about 90% of the companies I look at, they don't present realistic valuations or path to growth or sales. There's just a lot of wild thinking going on these days. It's an extremely frothy market. And my job is about 75% just wading through the BS, if you want to know the truth. So I spend a lot of time just trying to get down to it, but I don't spend a lot of time. If anybody tells me they're going to be the next Google, that's the quickest conversation I'll ever have. Because I don't have it. That makes sense. And maybe they are, and I'll miss out. But I don't like to hear that.
Okay, so that was super interesting. You answered 2 questions with that one. So
okay. 2 for 1.
Winner.
I'm going to ask Kato to change gears a little bit. So what are some possible cultural challenges? So we're not talking the finance side now, but what are some of the possible cultural challenges that come up when you're bringing an idea to market like cannabis, right? And the various social perceptions, and what's the best way to overcome these challenges?
Wow, that's a big one. So I kind of live that every day. There are plenty of negative perceptions against cannabis and other things like that. And a lot of it's just really education, helping people understand what it really is and what it isn't. So if you look at what cannabis is and the reason there's a big prejudice against it, it's a Schedule I drug. A Schedule I drug has no medicinal value and is highly addictive. That's like heroin, it's like opium, cocaine, and marijuana is on there. But we already have tremendous use cases here in the US and elsewhere around the world about the medicinal value of cannabis. We've already had a company go public that treats adolescent epilepsy with cannabis. And so, that's kind of blown out of the water. And I've seen tons of research all over the world that we're curing some miracle diseases with this thing. I mean, I've seen, just really beautiful things happen with medical treatments of people that use cannabis. And so that should not be a Schedule I drug. And that's been arbitrary, it's been random, it's been politicized, and that's kind of why it's there. But as a plant, it is a plant, and you can look at it, think of it as corn, you can think of it as soybeans, you can think of it as other kinds of agricultural products like that. But it also has medicinal, also has industrial, and has commercial uses you can use. So a lot of it's just education. But then some people, and so what I learned, I started out in politics a long time ago. And so what I learned is that you can't fight an emotional argument with a rational one. You don't win those. If someone has an emotional perception on something, you're not going to win them over with data. And so, I try to avoid those, and I just walk away. Investing and raising capital, it's a numbers game. And so I've raised billions of dollars over my career, but cannabis is harder. Instead of 5 meetings to get $1 million, it takes me 30, 40, 50 meetings to get $1 million out of someone. And so you have to really have a foresight about how you go about and kind of tackle that. Because you're going to get it. And so, I've had people say, the only place I get some really funny ones are in Texas, and really mainly friends and family. They're like, well, what about the cartels? I mean, aren't they going to get into this business? And I was like, I don't know. I don't know anybody in the cartel, and I've never talked to anybody in the cartels. And I don't know anybody cartel with a license to grow legal weed in the US. And there's never been a cartel that's robbed a dispensary or a cultivation or anything like that. And so, there's just a lot of education. There's a lot of misperception about what it is and what it isn't. But the reality is that it's an industry that is it's going to be bigger tomorrow than it is today. And right now, it's the largest cash crop in the world, and it's grown by leaps and bounds. But it's hard. But it's real hard. It's not something, and it's just you have to. I basically have to, and what I always do is I do not internalize the rejection, and I just find ways to get to that next yes. And so I just keep going until I get to the numbers that I need to get to, because what we've done is built is a beautiful thing, and it really works, and it's straightforward, it's simple, and it captures what people are looking for. And so I listen to the market, and that's what I delivered. But I just have to talk to a lot more people to get there.
Thank you. That's a wonderful answer. And I remember when you and I talked a while ago, I was asking you about it, and you were telling me about the people you knew who it had helped, the medicinal value, and so on. And I just found what you said really compelling. So, from a purely emotional standpoint, I think you have a case to make there too, as well. And, it's the authenticity that you hear that can also make a difference. Okay, so we have a question for Ray that is that I think really is a great question for this series, because it's a perfect follow-on to our last series, which was about ESG, environment, society, and governance, and the industries surrounding that, and companies and the pressure they're under to be greener and be more inclusive and have more transparency in their corporate governance and so on. So this question says, Ray, what do you look for? What kinds of indicators of greenwashing, which you mentioned earlier, do you look for? So how would you know if a company's faking it, and how do you deal with that?
That's a great question. And the short answer is, I really don't. because this is kind of a new phenomenon. I mean, 2 years ago, when BlackRock kind of led the charge and announced that they were going to have very robust ESG and social impact metrics on all of their investments, how many hundreds of billions of dollars worth of investments, everybody scrambled because if they were going to get BlackRock's money, or most at this point, most of the other funds' money as well, they were going to have to tell a story. And the problem is they didn't know how to tell the story. Number one. Number two, they didn't even know that they had a story, but having good PR departments and all this kind of stuff, they came up with many companies came up with things that sounded very viable. Probably the best example of this are the oil and gas companies who are now all seeming to repurpose themselves as great defenders of the environment and and alternative energy and these kinds of things. And this didn't start yesterday. BP probably started this 15 or 20 years ago, but everybody is repurposing themselves to push ESG into the forefront. And I guess we just have to have a little bit of discernment if we look at how much of their investment and their productivity and their capital and so forth goes into things that might be considered, let's say, environmentally friendly versus not, and then compare that with their story. And you can see that across the board. It's just something, as you have your checklist, as you look at investments in the future, and your checklist should always, in my opinion, include, the environmental viability of the company's service or management, and also the measurable social impact that whatever they're doing will have. You should also ask yourself, is this story they're telling me true to the best of my knowledge, or is something fishy? Now, in the future, I hope that I'll have a better answer, and there will be better answers, but this is kind of a new thing, and that's kind of the best I can offer now.
And I think this is a problem for everybody. It's a problem for individuals, certainly trying to do due diligence on this one, but it's a problem for BlackRock. It's a problem for everybody.
Yeah.
Because you got to do a huge amount of digging to figure out if they're walking the talk, right? And no, the metrics don't even exist for establishing your greenness or this or that in some way. So it's a really complicated set of questions. So hopefully we'll have a better roadmap for making those determinations down the road. So Kato, I have a question here that I can ask you that I'm looking at, but you mentioned you were reading the questions in the chat. So is there one you would particularly like to answer?
Oh, sure. I'll take a look at that.
And if not, I'm happy to choose one.
Yeah, why don't you, I mean, there's a whole bunch of, well, actually, I got it, hold on. There's one, yeah, there's so many good ones. Hold on, I like this one. With some of the virtually no capital, what's the easiest and most efficient way to get involved in the cannabis industry?
I think a lot of people have that question. Might as well go for that one.
I tell you, that's exactly what I built. I'm the first of my family to graduate from college. I wasn't the only, but I was the first. And I had a wonderful career. But part of the beautiful story I just told is that in that process I got divorced. I had a massive. I broke my leg and I couldn't work for a couple of months and recovery of those kinds of things. And so, I had to really kind of figure out what I was going to do and how I was going to do this. And so I put every penny I ever made into this fund. But that still wasn't enough to get me to launch a $50 million fund. And so, most private equity is one of the most difficult areas to get into. Venture capital and private equity are absolutely really challenging to get into as a GP because it takes money. It takes a lot of capital to do so. And so I didn't have that. So what did I have? I had an idea. I had a lot of grit and perseverance, and I had a massive network And so instead of coming with capital and putting that and then finding the investment ideas, or even just finding the investment ideas and then finding the capital, I needed to build all of that. And so I went out and I found, I created that premise for the investment, and luckily I picked a great industry that had really great returns. And I structured it in a way that, and created a story around it that was compelling for people to want to invest in that story. And I started telling that story to investors about, hey, we're finding these things, we're putting those things together, and they're like, hey, this is really great. I really want to do that. Who's going to do the investing? So then I had to build the team. So what I did, and I don't advise anybody to do this because it was really, really, really painful and hard. As you know, my partner and I and and her family and my family, everybody, we raised a seed capital to get us to that next level, because all that R&D took a lot of money to kind of get that and build that out. I wasn't, I left corporate America. I didn't have a salary coming in. And so we had to have capital to get to this next level. We had a great idea. We also leveraged the bright minds of MBA schools all over. Initially last year, we started out with working with the business of legal cannabis clubs that they have at Harvard, Yale, Booth, Berkeley, Wharton, and the like. And so we recruited a number of really bright students to help us really build out a model for how we're going to do our due diligence and research, and start doing the research on those funds so we could have some real data, because I had really come out with a conceptual idea of what we wanted to build, but we needed real data that it was going to work and it was real. And so we had really wonderful students come in and help us put that whole program together, the basic infrastructure, so we could dive into that research and do that. And that's also a way for folks to get in. We have a Fund Fellow program. I'm going to the campus tomorrow and talking about that and how we're going to recruit on campus as well for our program. We're a feeder for other VCs and private equity firms in cannabis and the like, and we've done that with the other Fund Fellows that we've had. And so that's also a way to get in, and so we're doing that as well too. So that was crucial. These students at candidates at UT and candidates at all these great schools were absolutely instrumental in getting us to the next level. And we have another cohort this year as well too. And so I will hire and work with an MBA candidate from McCombs or Yale or Princeton or Harvard any day of the week, because there are some really high quality folks that deliver a real high level of professionalism and execution that is really needed in a startup space like this. And then what I like to give back, so I just make sure that I understand where they want to go and help them get there. So we had that talent to kind of help us get there with that. And then I had to, then we had the idea, and I could really build that out. And then I could go and find and hire, not really hire because I'm a startup, really bring on some serious expertise. So last summer I was finally there. I really had the premise, I really had the story, and said, hey, I have the story that I want to sell and I want to build it, but I need you. So I brought in a chief investment officer, a woman who used to work with me in 30 years in financial services, an impeccable resume, Valerie Cordini. Never touched cannabis in her life, but she saw the investing story around us and the story that I had laid out for her, and she did her own research. She says, yeah, I think this is exactly where I want to put my time and effort for the next 10 years. Diane Hurdy, who was 33 years at BlackRock, also when I worked with her as well too. She built BlackRock's private equity division. The whole back office and finance side. They didn't have a private equity division. She joined from Merrill Lynch when BlackRock bought Merrill Lynch Investment Management. And so she built out their fund to fund business. She built out their private equity business. And so she came on because she wanted some place where she could really bring in all that experience. But she didn't want to take the risk that we took a year ago. She wanted when there's more level playing field, where we're closer to market, and that we could really use that to really level ourselves up. And so that's what I've done. I would say it's really easy. If your parents or anybody you know has money, will give you $10 million to start your fund. That's way easier than what I did. But I also think that I built the best fund out there because I was resource constrained. I had to make really good decisions when I had the resources to do so.
Okay, another super answer. There's so much value here. And I also want to mention, first of all, Kato, I'm delighted that you're starting to work with McCombs MBAs, because we definitely want them on that list. For the rest of you, I hope you saw, but just in case you did not, Ray has included in the chat his blog, which is String Theory by raybrimble.com. It's fascinating. He talks about lots of different things, and they're also interesting. You can choose them by topic, and I always learn something when I look at that blog. So I know you'll enjoy it. And there's just so much experience and wisdom reflected, particularly about the world, you know, the global economy and the way things relate to each other. I think the premise of string theory, Ray, is that everything is connected. Am I right?
That's right.
So we're out of time. We could go on all night. I certainly could. I love hearing all of this, but I know that some of you have other places to be, including our speakers. So I want to thank both of you very, very much for joining us this evening, and everyone else for tuning in. And we will continue our Global Shift dialogues next semester. And I wish you all a very pleasant evening. Ray and Kato, thank you so very much.